Governor Lane, you're very welcome, and I would like to wish you well in your new role and congratulate you on your appointment. Can I start with a domestic issue in terms of the new mortgage deposit rules, or the loan-to-value and loan-to-income limits that apply to most mortgages? And can I just put the case to you of somebody who is currently renting, whether it be an individual or a couple, that may be paying €1,000 rent per month, €1,200, €1,500. People in that circumstance will find it simply impossible to save the required level of a deposit, and they're at a very serious disadvantage compared to somebody who's able to stay at home with parents, for example, or somebody who has parents who are able to help them to come up with the deposit. So specifically on the issue of people who are paying rent, to what extent do you believe can the rules be reviewed to take account of the track record that people have of paying rent?
So my view of that is a track record of paying rent, or a track record of good credit standards, for example, like your ability to repay a car loan, for example. And by the way, with the central credit register, when that's up and running, a fuller picture of the individual, credit quality, if you like, of an individual or a couple would be easier to keep track. I imagine that banks, would value that evidence in terms of the reliability of a given couple to make repayments. I think rents, the example you give, are especially relevant for loan-to-income ratios. So in the sense of, if you demonstrate that you can sustainably pay whatever rent out of a given income, that is relevant in terms of the loan-to-income ratio more than the loan-to-value ratio. So, I think when we review these, later in the year, the issues about what are kind of measures of what is a sustainable level of debt of a mortgage loan relative to income. I think what you say about the evidence coming from track records on rents, we can definitely look at that as part of that. So it sounds sensible that a track record of paying rent has to be relevant in approving a mortgage. Having said that, the reason again why you do have because once you take a loan, buying a house is fundamentally different to renting in terms of the commitment. You have this now quite irreversible commitment to manage that loan, and so there is I think the concept of having loan-to-income ratios or related ratios like debt to income and so on is basically, it's fundamentally different to renting in the sense of allowing the fact that over a 20-year mortgage or a 30-year mortgage, you have to allow considerable margin in terms of shocks to income levels, shocks to employment, and so on. And then I suppose the last part is we were careful and in line with experience elsewhere to allow some margin. Now, I agree it's 15% margin in terms of the mortgage value. But again, I imagine banks, when they're working out who can go over the thresholds, the track record on renting, I'm sure can help in that situation.
Governor, I welcome your response and the fact that the whole issue of rent and people paying rent can be considered as part of the forthcoming review later in the year. And I know you say it is directly relevant to the loan-to-income issue more than the loan-to-value issue, but in practical terms, if somebody is buying a house worth €300,000 and they have to come up with a deposit of in the region of €38,000, they have to find that money and they have to save that money. And the reality is, if they are renting and they are paying €1,000, €1,500 a month, they will find it next to impossible. So I welcome the fact that it will be considered, but I think you need to take into account the simple fact that people who are renting privately are seriously disadvantaged compared to another first-time buyer who is in a position to stay at home with parents, for example. They can save at a much more accelerated rate. And I think that's just, it's a simple practical reality that does affect thousands of people, and people want to have hope. They aspire to owning their own home. In many cases, not everyone, but for those that do, and we're meeting them on the doorsteps, and they are feeling trapped. They can never see their way to saving that level of a deposit to buy their home, and I think they have to be given some hope.
There's no doubt that these rules affect different groups quite differently. But when I think about it, and you think about what happened in the mid-2000s when the availability of credit was much more readily available, and we know what happened in terms of the disaster of people taking on too much debt. Now again, the banks were offering these very generous mortgages to them, but we have to have a system which limits that risk. And I would also point out that I think one way, the way the sector will adjust is essentially the pricing on homes will moderate. There's lots of evidence, especially from the Irish situation, that there is not a complete but a partial adjustment, which is when credit is less available, part of the adjustment over time will be that the bidding war on houses will be less intense, and so people will be able to buy houses at a lower price than if credit were unregulated.
Governor, can I raise the issue with you of standard variable mortgage rates in Ireland, and particularly for existing customers, because many of the reductions that have been announced in rates over the last 12 months are new offers for new customers. But the reality is that there are tens of thousands of mortgage holders still paying between 4 and 4.5% on a standard variable rate product. In fact, in some cases, it's closer to 5%. And we don't have an active mortgage switcher market. And even if there were one in place, many mortgage holders are trapped because of negative equity or because their financial situation has changed and they wouldn't qualify for a new mortgage. And I think it is fundamentally unfair that the rate reductions which are being given to new customers are not being extended to the existing customer base across the banking system. And you are a new governor, and I would hope that this is an issue you will tackle. I note your comment in your opening remarks that you're not there to run the business of regulated entities, but I believe this is a clear case of discrimination being applied against existing customers vis-à-vis the offers that new customers are getting, and it's simply not fair. And I would put that to you and challenge you as to what you can do to address that.
So, in many markets do have this characteristic of discrimination. So, firms like when they can do it to differentiate pricing across different groups. So, I fully understand the perception that is unfair, that if you've been in that situation. At the same time, the central bank, I think, will hold a position that the banks have to be run on a commercial basis. That we can discuss the issue about the level of competition in the banks. We can discuss whether the existing high rates are likely to persist. But the bank cannot interfere with the contracts between the lender and the borrower. Now, you mentioned the switching issue, and I agree that there's not much switching going on, but the bank's own research indicates, there's more than you might think where households could benefit from switching, and one of our goals is to make that switching process easier. So in the same way, with mobile phone contracts and so on, the more you made it easier to switch your bank, your phone company, the more you make it easier to switch your bank, the less they'll be able to separate out the existing customers and charge them a high rate. So that is something the bank can work on, is making the switching process easier. But the issue of insisting that a bank treats new customers and existing customers the same way, I don't think that's really within our power.
Finally, In relation to mortgage switching, I think there is one practical step you could take, which would be to bring in a code of conduct on mortgage switching. There is one for people who want to switch a current account, for example, and you might save 20 or 30 euro a month. But people who are in a position to switch their mortgage should be shopping around, and they should seek to do so, and they could actually save a few €100 every month, but you need to make it easier for them, and I think a code of conduct on mortgage switching would be relevant. But I would repeat the point, Governor, that at a time when the cost of funds for the banks in Ireland has fallen to between 1 and 1.5%, it is unjustifiable to continue to charge rates that are multiples of that, between 4 and 4.5%. And the perception is that the banks are targeting their existing variable rate customer base to make up for losses that they are incurring in their tracker mortgage book, and they are offering more attractive deals to new customers, and there is some evidence of competition in the mortgage market for new entrants, for first-time buyers, etc. But if you're an existing variable rate customer and remortgaging and moving to another bank is not an option, then you are actually trapped, despite the fact that the cost of funds for your bank is a fraction of what they're charging you. And I think the central bank, in your role as the consumer watchdog, and you have a key statutory role in terms of consumer protection, I think there is more that could be done on that issue.
Okay,